This show is produced by the Hartman Media Company. For more information and links to all our great podcasts, visit hartmanmedia.com.
Welcome to the American Monetary Association's podcast, where we explore how monetary policy impacts the real lives of real people and the action steps necessary to preserve wealth and enhance one's lifestyle.
It is my pleasure to welcome Wesley R. Gray to the show. He is the author of Quantum Momentum, is his latest book, DIY Financial Advisor, Quantitative Value, Stock Picker, and another book off the subject, but about his military career, entitled Embedded. And he is here to talk to us about his methodologies and what he thinks is coming around the corner for us. Wesley, welcome. It's great to have you coming from Puerto Rico, right?
That's right. I live in
where a lot of you guys are coming from with your awesome tax deal.
Exactly. I live in Palmas del Mar, and there's certainly a lot of crypto folks down here.
I have 3 friends that live in there. So, yeah. The economy is changing pretty rapidly. Jerome Powell, I think, thinks he's the reincarnation of Paul Volcker, which I never thought he would have the guts to do what he's doing. But he seems to be pretty fast on the interest rate hike handle. He waited way too long. Everything ran way too hot for too long. He should have raised sooner and more gently, in my opinion. But what do you think?
You know, I've been doing this for about 20 years, got a PhD from University of Chicago in finance. I don't know how I got into the place, but a lot of people consider it pretty good. I used to be a stock picker. I used to be a prognosticator. And honestly, I think a lot of things, but I've learned that I don't really know anything. So the primary way that we think about, how do I allocate my risk? How do I allocate my assets? How do I think about what Powell's doing, what have you? It doesn't really matter what I think. It's what prices tell me. And we are big converts and always have been fans of trend following. And the basic idea is I just look to any asset market, and if it has a positive trend, and different markets are different, like we talk about crypto, but in general, if you just take something brain dead, like a 12-month moving average or a 12-month moving average, and if the price of that asset is above, great, I own it. If not, I go to cash, or some people short it, right? And so if you look through that lens, as of literally 2 days ago, you really shouldn't own anything right now except maybe a sleeve of commodities. So according to, if you're a trend follower, which is kind of my, I guess, ethos religion, because I gave up trying to predict what these people are going to do. I mean, it's certainly not a bullish stance. It's been talking about, or Trend has been saying this for about, almost 8 months now. I mean, really the only kind of risk capital you'd be deploying right now might be in like a commodity sleeve of some sort, but otherwise like equities, you should be flat, market neutral, duration bonds, flat, market neutral, real estate, market neutral. I mean, everything you should basically be sitting in cash, being tactical, waiting for different trends out there. And that's
okay, so let me before you move on, let me ask you about that. So sure. Just to make sure we understand, you're bullish on commodities, right?
A little. I would say commodities are like not super bullish, but like
better than everything else.
Better than everything else is in the shitter. In commodities, I would say not bullish. We were bullish, but now the trends are starting to break down there. It's less bullish, but
okay.
Depending on how you look at the trend, it's like some of them are still, positive. So okay. I'm kind of bullish.
So one of the things we talk about a lot on the show is a term I actually trademarked years ago called packaged commodities investing, where when you buy the real estate, you're buying the copper wire, the concrete, the lumber, the petroleum products, all that, the glass, the steel, et cetera. And so I like commodities too, but, on the cash component issue that you just mentioned, what about that evildoer, that pickpocket, that thief called inflation?
Yeah, 100%. So obviously right now, if you sit in bills, you make like whatever, 3.5%, 4%. And arguably like, well, obviously realize inflation's higher than that. So there's a cost to carry to having the call option to move and maneuver. And that just is what it is, right? But that cost to carry, like whenever you have a bad trend, it's usually a signal of a high likelihood of a left tail event, which means like a big loss of not talking like 3 or 4%, but maybe like 20, 30, 40%. So I 100% agree that right now cash as an asset probably isn't earning higher than like what inflation is right now. But that said, you have that optionality to move and invest in assets that once they get a positive trend, you're ready for it. Whereas if you just sit by and hold or static, that allocation now could be losing 30% before you can do that. So it's just a trade-off kind of they have to think about. But I concur that if one could find something that had equal risk profile of cash, but generate a lot higher return, obviously that'd be better. But that's hard to do because it's hard to find things that have cash like risk, but much higher return right now.
Yeah. Okay. Moving on. What else do you think we should be looking out for as we go down the road here?
I mean, the other thing, and again, this is like boring, like Warren Buffett advice, but I see it all the time. We have, I think, $2 billion now in advisement. And that's, you always got to watch and monitor the fees and taxes, right? Like in any world, but especially this world, the only thing you can really control in the end is like your tax rates. And, they're probably not going down, I imagine, in the next 10, 20 years. And Uncle Sam charges a 50% performance fee to a lot of people. So I would always be on the lookout for ways to minimize, cut that down, because that's something you can control. And same thing on fees, right? Like to the extent that you can find ways to access the asset class or whatever you're trying to do cheaper, more efficient, we always recommend that, just because as market innovations are moving faster and faster, and we're in the infrastructure business, so we see it every day. The opportunity to replicate or do what someone else is doing for half the cost keeps going up, which means that you should make sure you're always looking at alternative ways to achieve the same thing at half the cost. Because again, fees and taxes are things you can often control. Whereas we can't control what the economy is going to do, what inflation is going to do, but I can keep my fees down. I can keep my tax rates down as much as possible.
Yeah. Well, what is your outlook on the broader economy and inflation specifically? Are we going to see incredibly high interest rates needed to tame inflation, or do you think it's going to subside kind of the cost of money we're at now?
So let me caveat this. I would attach zero credibility to what I think, and I would just follow the models and be a trend follower. But if you ask my personal opinion on these matters, which again, I caveat, you should put zero weight on them because they're just my personal opinions. And I already
the most humble, self-effacing guest we've ever had.
I honestly, I know too much about how this works, and I've been humbled. I just don't believe what I say. But so for me personally, again, just at 100,000-foot view, it's hard for me to believe that you can continue to operate as a banana republic and just give people free stuff. People get lazier, they're less productive, they want more crap, and they don't want to pay for it. Like, I just don't see how that ends well, in like a 20, 30-year equilibrium. Like in the short run, anything can happen, but that would just seem to suggest to me that we should almost expect in the long run to have higher tax rates because someone's got to actually pay for all this crap that we're giving everyone, and or inflation. I don't know the exact rate. I don't know exactly the transition of how we get there, but I just don't see how, just from a math perspective, how it works out in our favor. Just based on the current status towards moving towards a banana republic. But of course, I'm a Chicago PhD, and that's called the Chicago School, like being rational and thinking about, it actually matters to have sound money. But I also understand that there's another philosophy out there that is, I wouldn't say they've been right the last 10, 15 years. But, if you would ask me after 2008, I would have told you, oh my God, after what just happened, there's got to be some inflation at some point from all this. And it hasn't really happened yet. But I guess this argument and this debate could be settled here in the next 5 to 10 years. Finally, it's just taking a while. Yeah. So that's my personal opinion. But again, I don't really know. I just trend follow.
Sure. What else do you want to share with people about? Tell us about some of your methods and your data analysis and the way you follow and forecast trends.
Sure. So, our basic investment philosophies are very simple. When it comes to buying assets, specifically like equities, we focus on 2 dimensions: buying cheap stuff, better known as like value, and then buying momentum, i.e. buying winners, right? So that's exclusively what we focus on. And I kind of break that down to like the fear and greed impulse of the market, right? Value is kind of the fear, Like, why would you want to buy this total dirtbag, like super ugly, nasty thing that's really cheap that no one wants to own? Well, I want to own it because it's really cheap and no one else wants to own it. And eventually expectations revert, right? So we're all about cheapness. And then the other thing is like the shiny rock phenomenon. Like humans also have a greed impulse. And I think that's viewed through like the momentum lens, where momentum is just a term in stocks, is just like relative strength. It just means things that are moving faster than other stuff. We like those two characteristics. So if I'm stock picking, I'm buying cheap stuff and I'm buying things that have been winning, right? If I'm market timing, like trying to identify, okay, if I want to own stocks, I'm going to own things that are cheap and I'm going to own things that are winning. But what if I just don't want to own stocks, right? Like, what if all stocks are going to go down 50% and maybe value goes down only 40? Like, who cares? They're all going down a bunch. That's where we leverage like a trend following ethos. And again, that basic concept is you only own a risk asset if it's in a positive trend, because all the big left tail events occur in asset classes when they're in a bad long-term negative trend, right? And that goes for crypto, that goes for stocks, that goes for bonds, that goes for anything you can ever imagine that moves a lot. I just trend follow. And that's it. So we buy cheap, we buy strong if I have to own it. But then I also got to determine, do I want to own it in the first place? And that's where we use trend. And again, we just to keep it real simple, because it's something that, we got 1,000 blogs on and there's books written about it. If your users are just DIY, all you need is like a 200-day moving average, right? Like that's what a lot of people use. We don't use that in particular, but if somebody were to say, hey, why don't you use that? I'd be like, yeah, that also works. So anything that's like longer term dated for most asset classes is fine. The one exception I would say would be like crypto or assets that have like extreme volatility. Usually if you have an extreme volatile asset that's like 2 to 3 times what a stock does, like crypto, you usually want to tighten down that trend follow. So instead of maybe say like a 10, 12 month type deal or 200, 250 day, maybe use like a 3 to 6 month trend following rule. So if I'm trading crypto, I'm definitely not buy and hold. If it's trending on 3 to 6 month moving average, I'm an owner. If it's not, I'm out. So like right now, I'm obviously out because crypto's in the shitter. But eventually, I presume it'll start coming back. But I would wait till it had like a good 3 to 6 month trend, and then you'd want to enter that trade again.
Why do you think, Wesley, crypto is doing so poorly when it should, at least in theory, be the inflation hedge asset? Like, I mean, where's Michael Saylor? Bitcoin is digital gold. Yeah. But it's not. This time around, at least. Yeah.
So I'm a card carrying libertarian. I live in Puerto Rico.
I'm right there with you.
Yeah, all that good stuff. I have never understood crypto personally. I just call me old or something. I just old school. I just like free cash for I like profits, like things like that. I understand the mission of what it's trying to achieve. And I understand that if it were to achieve the mission of becoming like a no kidding currency that was highly adopted by society, it's going to be worth a lot. My issue with it, and where I've always seen the risk, is how does that realistically ever happen in transition, knowing full well, as being a former, person that was in the side of violence, like the reason governments work and control is they control the violence. So unless crypto people have an army that can fight the US government and control violence and tax, they don't have anything. And so in the end, they're never going to win this idea, unfortunately. And again, God bless them, right? Like crypto makes so much sense to me. Like if you created this libertarian paradise, I'm all in, but I'm also just practical and maybe just too old and busted in the world. I just don't think it's ever going to happen. So I have never been a buyer of crypto as being this like kumbaya, like it's going to save like be sound money world personally. And so I just think it's always been a speculative asset that is really kind of a Ponzi scheme for all intents and purposes. But Ponzi schemes can be valuable if everyone agrees it's a good Ponzi, because that would be like the US dollar. That's also basically a Ponzi scheme, but at least we all agree to use it. And it's a unit of exchange that is backed by violence, and everyone agrees we're just going to use it. So it's a good Ponzi scheme. Where crypto to me is like a Ponzi scheme that I don't see how you're going to get everyone else to agree to play in that game eventually, right?
I think we are soul brothers on this one, because I've been saying that from the beginning when I first learned about Bitcoin and it was $74. I have always said, consistent viewpoint, I would love to be wrong about this. I hope it takes over the world. I want to be wrong, but I don't think it will, because the two most powerful entities the human race has ever known are governments and central banks. And as soon as Bitcoin has a standing army, then I will have faith in it. But until then, I don't, because as you pointed out very succinctly, the ability to inflict violence is what makes the world run. It sounds terrible to say that, but at the end of the day, that's true. You know, we always like to say, well, we're a nation of laws, you know, and that's like civility, right? But how are laws enforced? They're enforced by violence. You know, if you don't obey the law, you know, at first you might get a ticket. And then if you don't pay the ticket, you'll get a arrest warrant. And then if you don't come in and pay the ticket, you're going to get arrested. And that means someone is going to visit you with a gun. Okay.
Yeah, exactly.
I mean, that's how every law works. It works at the end of the day with a gun. Okay.
Yes, I agree. Yeah. And there, you know, I used to live with Iraqis. It was kind of very eye-opening because they always say, oh, you want us to be free like you are. They're like, you did not unleash freedom in Iraq. You unleashed anarchism. Because if you're truly free, that also means that you could pick up a gun and shoot your neighbor. You could do anything you want. That's called anarchy. Like, we are actually highly organized and not free at all in the US, where, you know, because they control the violence. And if, like, to your point, like if I go shoot my neighbor, they're going to come over here, put me in handcuffs and put me in jail. And, like, you know, if it's really bad, they're going to kill me. Like, in the end, you've got to have a lot of command and control in a society. You've got to have laws. And in the end, the main backstop to that is, you know, people don't like dying or getting shot. It's just unfortunate, but true. Yeah. And that's just how the world works. Unfortunately, I wish it was not like that, and I don't want it to be like that, but also. But
that's the way it is a famous.
It's the way it is. Yeah, exactly.
Yeah, absolutely. Wesley, I know you've got to run because you've got a meeting with a bunch of very expensive attorneys, and I know how those go.
Unfortunately, I do.
Give out your website. Tell people where they can find out more of your work and your writings.
Sure. It's just alphaarchitect.com. And then we have a big presence on Twitter, just, you know, twitter.com @alphaarchitect. Those are the two primary ways that you can access. And we have a blog. We have 3 to 4 blogs a week. It's all free. Our mission is empowered through education. So feel free to follow along and try to figure this stuff out like you guys are. It's a never-ending game of chess.
It sure is, but it is very interesting.
Oh, yeah. It's always fun. That's why I keep doing it. It's a fun game.
Well, Wesley, thanks for joining us.
Yep. Appreciate it.
Thank you so much for listening. Please be sure to subscribe so that you don't miss any episodes. Be sure to check out the show's specific website and our general website, hartmanmedia.com, for appropriate disclaimers and terms of service. Remember that guest opinions are their own, and if you require specific legal or tax advice or advice in any other specialized area, please consult an appropriate professional. And we also very much appreciate you reviewing the show. Please go to iTunes or Stitcher Radio or whatever platform you're using and write a review for the show. We would very much appreciate that. And be sure to make it official and subscribe so you do not miss any episodes. We look forward to seeing you on the next episode.